Hey, this is John with PDF Tax. This is the Qualified Business Income Deduction Worksheet for 2018. It's a brand new worksheet, and it allows you to take 20% deduction on your business income. So there's going to be a lot of people using this worksheet this year. And as you can see from the title, this is the simplified worksheet. And in order to use this worksheet, you have to have qualified business income, and your income, your taxable income, has to be less than $157,500, or if you're married filing jointly, less than $315,000. So qualified business income is income that from a business that you would report, for example, on Schedule C on 1040, or it could be income from a pass-through entity such as a partnership or an S corporation, and all three of those qualify as business income. And so we're going to see how that works for all three of those. You might be wondering what happens if you have taxable income above those two levels that I just mentioned right here. And if you do, you have to use a different worksheet. It's a lot more complex, and it's in publication 535, IRS publication 535. So hopefully you can use this one because it's a lot simpler. And the other advantage of this one is the definition of qualified business income is a lot less restricted on this worksheet than it is on the more complex worksheet. In other words, if you have a Schedule C, a partnership, a K1 from a partnership, or a K1 from a shareholder, as a shareholder from an S corporation, if you're below those income levels, then it's very likely that you have qualified business income. Now let's scroll down a little bit here to see how this works. So I've gone ahead and set up a Schedule C for Sam Jones. He has a retail grocery store, and I'm going to say that he has $10,000 of business income, gross receipts, and I won't enter any expenses on this Schedule C. I'm just using this example to show you how the qualified business income worksheet works. If you want to have more information about how Schedule C works, we have a video on that you can find in our channel. So I'm going to keep this pretty simple. I'm just going to say he has $10,000 of net income on line 31. And I've also set up a K1 form that a shareholder would typically receive if he was a shareholder in an S corporation. And I'm going to say that Sam has $12,000 of business income in his S corporation. And then finally, here's a K1 for a partnership. Not too likely that Sam would have three different sources of business income, but for this example, it's a possible. So we're just using this as an example to show you how that worksheet works. And we'll say that $14,000 of income here, like that. So now if we scroll back up to our worksheet, all of that came through right here. You've got the business name, the employer ID, and the qualified business income comes through right there for a total of $36,000, and 20% of that is $7,200. Now let's look to see how the $7,200 affects the 1040. How he gets to take that deduction of $7,200 on his Form 1040. But first, let's scroll up here. This is the Form 1040. As you can see, I'm using a draft copy because the final version isn't out yet. But draft copy is going to be pretty similar to what the final version looks like, so I think we're going to be okay with that. So on Schedule 1 here, we need to enter that $10,000 from that Schedule C right there. And then you remember he had $12,000 on his 1120S K1 and $14,000 on his partnership K1. So that goes on line 17. The total of $26,000 goes right there, and that equals that $36,000 that we saw earlier. Now let's scroll up a little bit further to see how this affects the rest of the tax return. This is the second page of the Form 1040, and there's our $36,000 right there, and there is our qualified business income deduction right there, $7,200. In addition to that, we're going to say that he had $40,000 of wage income from a job that he had, and then he has a standard deduction since he's single of $12,000, which goes right there like that. And in addition to that, he has on Schedule 4, he has a self-employment tax because of that $10,000 he had on his Schedule C. So let's go down to Schedule 4, and here on line 57, the self-employment tax is 1413, like that. But he also gets to deduct half of that self-employment tax on his tax return on Schedule 1. So on Schedule 1, line 27, half of that is 707, like that. So if we go back up again to this 1040, now his taxable income is $56,093. And if we look in the tax table in the instructions for 1040, we will see that the tax on that is $82.80, just like that. So there we go for that. Now just a couple other things before we can finish this here. He probably made an estimated payment for that income that he had of $36,000, and hopefully he did. That would go on Schedule 5 down here on line 66, and let's say he made a payment of $6,000, like that. And going back up here, there's the $6,000, and he undoubtedly had some money withheld on this job here, this $40,000 of W-2 income. He had, we're going to say that he had $4,000 withheld here on line 16, so we'll put 4,000 right there. So that would give him a refund of $307. There is page 1 of his 1040 filled out, and there's the 307. And let's go back and look at that worksheet one more time to see how that finally worked out. So there's that 36,000 we saw before. The 72,000 is on line 10, and then the income before his business deduction is $63,293, and 20% of that is $12,659. But you have to take the smaller of line 10 or line 14. So that's the $7,200. That's where that came from. And again, that goes up here on line 9. So that's how that worksheet works. Thanks for listening.